highest grade copper and gold intersections that we've had to date on the property. It seems to be getting better and better.
FireFly Metals has strengthened the development case for its Greenbay copper-gold project during the June 2026 quarter, reporting encouraging high-grade drilling results from a core zone expected to support early high-margin production. Here to discuss the quarter is Managing Director Steve Parsons. Steve, good to see you.
Yeah, good to see you, Jonathan.
Good to have you. So let's talk about this quarter. Talk us through the key achievements at Greenbay and what you're seeing.
Yeah, so like, for the previous quarter upon quarter, we do have a lot of work streams going at the same time. We're always running pretty fast at FireFly. And so you'll see from that announcement that we just put out some really good cracking drill results, and the highest grade copper and gold intersections that we've had to date on the property. It seems to be getting better and better. There's a lot of infill drilling that's been happening at the moment, getting the resource, the 80 million tonnes resource, into measured and indicated category. And so you saw, some of those infill drill results of, 30, 40, 50 metres at 4, 5, 6% copper equivalent. And they really are, the cornerstone to upgrading the resource, which will be coming out shortly with our PEA scoping study shortly as well.
And we'll talk about the resource in a second. But what are the latest high-grade drilling results? What do they tell you about the core zone's early production potential?
Yeah, so if you remember the core zone that we have, it's nearly 20 million tonnes going at almost 4% copper equivalent. And every time I say copper equivalent, think of the ore body as being a copper ore body with a gold credit to it, okay? It's incredible in that regard. So it's about, sort of 20, 30% gold, depending on where you are in the ore body, and the rest, sort of 70, 80% of copper. So it's copper ore body with a gold credit. And the resource, as I said, 80 million tonnes. We currently have, we're at 2.2%, copper equivalent for 1.7 million tonnes of contained copper equivalent, which is mostly copper with that gold credit. So what we wanted to do is really infill that high grade area, and that's what we're doing now, hence what those drill results are, and converting that, nearly 20 million tonnes at 4% into the measured and indicated category. And you're probably going to see some more results coming out, I'd say, in the next few weeks, as well as we lead up to getting that study complete and that resource upgrade completed. And of course, that high-grade material, we expect that to be real, significant when it comes to the early years of the mine life and production, obviously.
So what will that updated mineral resource, what will that add to that August economic study?
Yeah, so they'll be coming out at the same time. We expect that to be, and the study is, it's imminent. We're expecting in the next few weeks that to be completed. Obviously, there's a lot going on with all the consultants and everyone at the moment. And obviously, the most important thing is we just want to get these high-grade numbers all back. And you saw the latest drill results come out, a couple of weeks ago. We're hoping to get one more batch in, and then that's the final lot for the study. The resource is still very much open, so when we come out with our bankable feasibility study at the end of this year and start of next year, there's going to be a truckload more of high-grade material coming into it. But you have to draw the line in the sand somewhere for the study, and so we want to get it out. So as we've said, it'll be July, August to be getting that out.
And Steve cashed up as well, 196 million in the bank.
Yeah, there's a lot of cash there. So, just under $200 million, the main cost for us at the moment, we're not blowing our brains out when it comes to cash. There's 6 drill rigs turning underground, adding more of this high-grade material in. You'll be seeing that shortly. And then there's the regional targeting kicking off, in earnest now as well. So once that study comes out, you're going to start to see us talking about those regional targets a lot more, and you'll probably see those drill rigs ramping up as well. So plenty of cash to keep us going for the next, couple of years easily.
And Steve, just to sum up, you've touched on a lot of the points here, but what can investors see over the coming quarter?
Well, there's plenty of drilling. So as I said, 6 underground drill rigs, that's all about high-grade, step-out growth drilling. There's a little bit of infill to do in those high-grade core zones. You'll see some more coming out in those high-grade areas. There's going to be some near-mine drilling that you're going to see shortly as well, which we're looking forward to getting out to the market. And then there's the sort of satellite deposits. And, we started drilling on a couple of those satellite deposits, Rambler and East Mines, which are only a few kilometres away from where the processing plant will be built. So we're pretty excited by that. And then on top of that, those regional targets for the first time. So we're out at Tilt Cove now. Drill rigs have started. So I expect to see news flow on all of those. But, the big one is the PEA scoping study, and that should be out very, very soon. And, when you've got 80 million tons of material going at 2.2%, and the grade seems to be getting better and better as we're showing, I'd be expecting to see a multi-decade, high quality, copper with gold credit mine coming out very soon that the market should be quite excited about.
Yeah, Steve, I'm sure we'll touch base when that PEA comes out and have another chat. But good luck with it all, and yeah, we'll speak again soon.
Thanks, Jonathan. Cheers.